Hello, YouTube. Let's see if this works. Yep, we're up. Hi-ho.
Take money to make money in trading.
I heard somebody in the background. That was really low, though.
Yeah, I heard that too.
Weird.
Oh, that might have been me.
Oh, okay.
It could have been. I had it clicked on a YouTube video by accident.
Gotcha.
Here you go, everybody. Here's the BuzzBee in the options.
Yes, that BuzzBee is freaking awesome. That's exactly what this is.
Yeah, we're going to study that BuzzBee, aren't we?
Those plays are just, the frequency of them is high. You see these all the time. And you also see inverted BuzzBees. You'll see bearish BuzzBees, where you can get a quick bearish scalp. It's just neat how you can see them so regularly. 404.50 is where we're going, it looks like. And Drive Shack's letting me down. Ugh. I'm about to find a new penny stock to look at.
Let me down. Oh, we're on YouTube. Sorry.
That's all right.
I don't think I did eight measures. So
there you go. Yeah. The rule of copyright infringement.
Yeah. I think it's 8 bars. It might be 8 notes. I can't remember.
So I have $3 of options buying power in my account. So I'm looking at SPY options expiring today. So maybe I should hedge my puts.
So you're holding options that expire today, or you're looking at them to trade?
No, I'm looking at one to trade for $3.
Ooh, that's always rough to do with 0 day on those. You can do them on momentum, but you've got to like be right there when the event is setting up. So like if we're looking at the FOMC move, if the setup is there and you see price hitting exactly at resistance and you see a quick reversal, you can scalp those 0 days pretty quick with a spread, and it'll of course hedge your loss because it's a spread. But finding them close enough to the money where they'll be worth trading on a 0 day is very rare, unless you get a massive move, and we're talking 10-pointers.
Now, you could get some big movement today. I don't know about the call side, but it's possible.
I just went to the 15th.
The 15th would be better at least, because it's at least gives you a little time to mess with it.
There's a 4:30 call for $3. Implied volatility is 44%.
That's
The
way the hell out of the money.
The delta is 0, basically.
Yeah. I don't know that I'd be interested in trading that one. Let me see if I can find something that might be a little more worth looking at.
If anybody said it in the chat or anything yet, but we've broken through the high for 12.522, which is basically last week's high at 40.75.50 on the MES.
So we've still got just barely enough room to get to that 404.50, but it might break just under it around 404.35 to 404.45. Let's see, we got one more stand on the 1 minute 8 period here.
So freaking wicks.
Yeah, that's a lot of wicks.
But you look on a 15-minute chart, and it's not a lot of wicks.
Right. And the 15-minute chart's pretty clean rise.
Yeah.
I gotta find another penny to look at.
You're setting up now. We still got 15 minutes, but so far, the 30-minute chart, you have bar spinner. I love multiple charting. Thank you so much, Jeremy.
Anytime, man. I love it too.
And Sig too. Sig, if you're out there, I learned this from you two guys, and yesterday I made a trade on a 15-minute candle.
Nice. I'll just run a 4-grid of SPY for the morning here.
Well done.
Thank you. I'm gonna probably step away in a little while and try to get some videos made, folks. They got some things we want to show y'all.
Yes, I appreciate all the videos that you guys are coming up with.
I'm into the Wicked Wicks right now.
The Wicked Wicks.
The Wicked Wicks, yes.
So what is this move significantly right now? Straight up 50% retracement, roughly. I mean, you take the height here and kind of stack it down here to the wick. This is your consolidation point. That was yesterday's bearish measured move. We're going to tag right under that sucker. And that's where I'm going to be watching for reversal. And we got just a few minutes here, or 12 minutes and some change to the 10:30 event that might affect this.
So much to remember. I even marked out that 50% retracement earlier.
It's just so neat how you can just find previous price action, slap a pivot on, and know where your price targets are. I mean, we make it look easy, but it really is easy.
It's just complex. It's just,
Yeah.
you gotta, oh, speaking of thinking, you gotta be thinking left and right and left. You gotta be thinking.
You gotta apply a little bit more than the old Konami code there, that's for sure. Kind of spooling through my penny stock list and seeing if there's anything that's worth looking at, but man, it's kind of today.
How many penny stocks have you got in your list? I've got about 40.
Let's see, I've got 1, 2, 3, 4, 5, 6, 7.
Did you say 40 or 14?
40, but what I do is every day I add the penny stocks from that day to my master list, and I've got a master list of over 40 penny stocks. Am I just wasting my time?
No, you're not wasting your time. You just have to be looking at, normally there are some that you would look at on a long-term grid, but those ones that are flat that just pop and drop every, so often and, only last like 3 days, I wouldn't keep an eye on those.
Okay,
Right.
I get you.
Yeah,
I'll try and modify it to get rid of those.
I'm going to do something for you too, and for all the penny stock folks. I'm going to show you how I learned how to use that zigzag indicator on like a 20 grid or a 16 grid, 16 charts, watching 16 stocks at once, and then that zigzag indicator. It's got the magenta and the teal, and we would look for those. Scott and I would keep that long-term grid on, and then we'd look for those teal and magenta candles, specifically the teal ones. And when we would see those start to pop around, we'd keep an eye on it because that's where you want to get in. That's your bottom of your channels a lot of time.
I'm with you. I've been watching your videos. Cheers, Stone. They're brilliant.
Oh, thank you. Well, I learned it all here at Bullish Bears, and it's how I see things. So we're gonna do some more of those. I'm one of those guys. I just got to figure it out my damn self.
I hear
It's
you.
me. But then I'll tell everybody what I learned. So
I've got 20 on my list, but I'm always looking at that gainers and losers thing. RNA here has a gap fill that just occurred. It's too late now, but the break was 1725, target 1850. And it's just, at least, you can look at it and learn from it. I wouldn't try to scalp it at this moment, but
right.
well, maybe. Shucks, it's going to hit that thing right quick. That's where I'm going to expect to see some profit taking, so let's see if it gets through.
Long time to be in that for that much.
Yeah.
I've been looking at I'm sorry, I was talking to myself.
Oh.
I was in the MES, and I had gotten in, me and Red Hammers, but it just took so daggone long, and it was only, it was nothing.
Right.
But
Bam.
I do, a lot of my focus has been on focus on the future here.
That just
The
nailed that
futures.
target, wick through to 1880. That quick, guys. That's how fast those things will run on you. And that's why I also love looking at the biggest losers, because I love looking at those dead cat bounce setups. And if you keep catching these runaway stocks too late, go look at the dead cats. They're much easier to trade, usually.
Yeah. Yes. Usually.
Usually. I'm gonna say
CS
that.
is not following through like it should.
No, it's not. It might grind along, but I mean, it's like it shocked the hell out of its long-term investors. Oh gosh, they're going to voluntarily delist and go and file with the pink sheets. You know, it's like, okay, they're going OTC. What's the big deal? That's a smart move for that company because they've been scalped to death by being listed on the major indexes. Let's go OTC and try to save the company. I get it. Smart move for the company, but panic sellers are going to keep pushing that, and eventually, the short sellers that are driving right alongside those panic sellers trading this action are going to have to cover, and that's what we're looking for as far as a setup to see if it's going to dead cat bounce or not. But the news does play a lot of that. A lot of people are scared.
Look,
A lot of people lost 58% of their assets in that company overnight. I mean,
lost their assets. Okay,
Yes.
here's
the
our little,
break.
that break. If you look at it on the 5-minute chart, that's a lot of small candles moving up though, but a lot of small candles, a lot of range there. If you're scalping that on a 10-second, you got that skill, you'd have been still making money.
Right.
I'm a little slower. I like it though. I like it.
Like it like that. A lot of
I
fun.
got about 2 minutes left on this 5-minute candle. It'll be interesting to see what it does. But you got that flat green hammer. You see how you've gone up on 5-minute chart, and then you get to that flat green hammer.
Yep.
When I say flat, it doesn't have a wick on top, and it's a truly hammer. But in context, that green hammer down lower might mean something. But right now, it's looking like at least a little pullback to the 8, if not more, after this 5-minute candle. But it has to close in the next minute and a half.
This will tell you if it's going to bounce or not. And typically, these will retrace. Like we have the three-legged measured move, so to speak. It'll go and retrace back to a control level. And that's going to
That's
be
what it's doing.
this leg here.
It's going right back to the top of that big green candle to the left. Candle number 5.
403.75. This RNA is going to cook. I'm going to find some levels on that real quick. Where are we? Weekly.
RNA, I think I saw that one earlier.
2050.
It's like in the $14 range.
It was. Now it's at 1870. 2050 is the next leg.
Should have said something.
I
saw that.
I just went and
dadgum
flipped through
thing.
my penny, my biggest gainers, biggest losers thing, and that's where I found that real quick. And then I just looked at the daily chart, found that gap, and then I started looking at the 15-minute chart, and it's just a measured move. Pretty simple.
Yeah, it was at the $14-ish level when I saw it pop up, and I went, I don't know, let me go and buy. Because,
Like oftentimes I will literally just go and pop that list up. Let me pop it up again. There it is. We'll go to
all
top
right,
gainers.
roll over. Came back down. But here's the thing now. That's on the 5-minute chart on SPY. That is a big red bar. It's still the only red bar in 1, 2, 3, 4, 5, 6, 7, 8. Out of the last 8 bars, it's the only red one. So what does that mean? Well, it's possible to watch the next one come back up and engulf it. It's just a pullback.
Right.
Perhaps.
That's weird. It showed up on my phone differently. I found this one on my phone. But anyway, what I'll do is I'll look for top gainers, and I'll just start clicking through them. And then what I want to do is, when I see them, that's a nice setup for a dead cat, isn't it? Oh, that's a OTC stock anyway. But I'll set it up on a 15-minute chart so I can see where the major price action is likely to take place. And then I'll just keep clicking through them and look at that like a spark chart. I'll see it on a 15-minute chart and know, okay, that one's already made a 50% retracement. That's done. This one's got potential to run up to the next level if it gets out of this resistance zone. It's got to break like 355, and maybe it'll go up and shoot this gap for 385. So we can kind of keep an eye on that one. This RNA right here, that was easy to see. Big measured move, set up. It was right here when I caught it. But you can literally just pop this window open on Webull desktop or the mobile edition, and you can find top gainers and just scroll through them. Pop them up on a 15-minute chart, see what it looks like. If it looks interesting and you've got enough price action seat time, you'll be able to recognize what interests you right away. It'll stand out to you. And it's just a matter of clicking through them and taking a look. That's some unusual volume for this one. Big old diamond top though, so it'll either break out or break down. That is really ticky-tacky on a 15-minute chart. I don't think I'd want to trade this yet.
Okay. So far, the green candle's doing on the 5-minute chart. You see again on SPY. Look at it on 15-minute. Check it out on 15 Sensei when you get a chance. SPY. Oh, you got it right there.
Yep.
Big difference, huh? You see how you see all those little hammer dojis and stuff? When you put them together on a 15-minute chart, that looks like we're in a bull flag.
Yeah, it's a bit parabolic too.
But that wick, all right. So yeah, it was a red candle a minute ago, and it's still got about a minute and 45 seconds to close on the 15-minute chart. I sure would like to see it close with a bigger body than that.
Huh, my list isn't popping up again. Weird. You can lay your price line, if you have a price line that does it for you, right on top of where we are right now on that 5-minute chart. On top of that big red candle, lay it on the. You could do the high, but I do it on the open, and you can follow it back to yesterday's consolidation. Yep.
On a 5-minute.
Right in there
To the
where we
base
set
of
that
it.
control zone.
I love price action.
Then the 15-minute
really do.
chart, I mean, it shows up exactly as a control bar top right there.
Now you got 40 seconds or 50. Yeah, 40 seconds, 50 seconds on this candle.
When I drew this
5
line,
minute.
I was talking about, like, you know, when I was looking at this line on the 5-minute chart, I drew it on a 5-minute chart. I literally just looked for the consolidation. I looked for this mess, and found about the median of it, about the center of it, and then realized there was also a 5-minute control bar right here. But knowing exactly where that consolidation point was important, because that is a known pivot, a known point of control, and it's where we're likely to see this consolidation. So now we've consolidated. We've got about 2 or 3 more 1-minute candles to decide whether it's going to break this range, or it's going to just sit in this range, or it's going to roll over and reverse. It'll give us a sign on a 1-minute chart. And then the 15-minute chart's already kind of stacking a spinner right here.
You see that? Mm-hmm.
That is a sign
We're
of
hitting
I'm
oil
gonna
now.
pull back. Yeah. 10:30.
Oil's coming in now. Yeah, thank you, Trace. I'm so busy watching the candle. Yeah, that spinner and that wick.
I cannot get my gainer loser list to come back up again. I don't know what the heck happened. Pardon me.
When you go on those larger time frames, Jeremy, this is where I learned from you and Sig. But then I started observing how things moved. You start seeing those wicks. Like on a 15-minute chart right now, we're looking where we had that dragonfly doji that I joke about all the time. It's really not a dragonfly. They lied to us. And you see right now we've opened up below the body on the 15. We've opened up below the body of that previous candle.
Yeah.
And it has that wick on top. And the one before it has a little bitty wick, and it's a hammer. But it was showing a little bit of slowdown. So you get those wicks that start. I pay attention because I look for the rollover. I look for the pullback.
Right.
and I can make a decision about when if I'm going to get in there or not, and then go look at my 1 minute.
This
5
candle's
minutes.
targeting 403.50. If this rolling top breaks over, that's where it's going, 403.50.
There's a pivot right there, also at about 403.65, maybe a little 62.
Good morning.
Oh,
We got
64.
got the blind trader hanging out with us on our YouTube channel.
Hey, blind trader.
Hanging
I'm the
loose.
bald trader. I'm gonna start calling myself the bald
The bald
trader.
trader.
The bald-headed.
Love it. And then to answer your question earlier, Victoria, I keep about 20 penny stocks that I have traded on my scalp trophies list. And I keep an eye on them. I'll scroll through them once in a while, but mainly I just look at the percentage on them. I'll just look at, okay, well, it's moved 2% today, or it's moved 5% today. And if it's got interesting enough range, or the spark chart looks like it's got a quick little setup I can scalp, I can revisit them and scalp them again.
Yeah, so you keep like a group of charts, and it's almost like you know how they trend. After you've watched something for a while, you kind of get a feel for it, don't you? And you think,
Exactly.
yeah, I'll keep an eye on that for more scalps in the future when it goes down to this level, yeah?
Exactly, and that's how like COMS came in to be interesting for just basic price action trading. Eventually,
Yeah, that one's on mine as well.
eventually, if it becomes like flat or it's just not having enough range to be interesting anymore, I just take it off my list. So it's like I can go in with a lot of different stuff and pick it off right now. Like I've got like XELAs on there. I got to get rid of that. Let me see here. I might keep WISA on there a little while. TCDA is kind of a no longer interesting one. CORZ is still interesting. There's a few that are still interesting. It's just a matter of if I don't like them anymore, I can just pop them off, add some new ones. CNET is one I'm definitely going to take off. That's just basically going to be a long grinding fade now, but that was a great retracement stock to trade, not too long ago. So it's just a matter of like I said, you can flip through them, set your chart to like a 15 or 1 hour or something like that. Stretch them out enough to where you can see some previous price action. If they look like they're still going to have some interesting range, cool, keep them on there. If they're not, ditch them. Go find some more.
Brilliant. Cheers, Jeremy.
Cheers. And that allpennystocks.com, that's great. You go and you find a list of only trading on the NASDAQ. That makes a lot of sense because then you can find stuff with stability in it. NASDAQ's not too harsh about keeping them at a minimum of $1 share price or something like that. But they're not quite OTC yet, and you'll find a lot of interesting stuff to trade there.
That's a big thing you taught us there about that penny stock. Well, you said allpennystocks.com,
and
it's mostly NASDAQ. Is that what I heard you just say?
You can filter it to show you only NASDAQ.
Oh, that's pretty cool. So check out your 1 minute hammer, inverted hammer. What's going to happen?
There's indecision
Basically,
here.
that's basically a big doji.
Yeah.
Those two candles. But you see what happens there? But it's where it happened. It was on the MES. It was at that 4073 level, which was a control bar from somewhere.
And it's what I call a mini channel to boot. You got some oscillations here in a descending channel. Yeah, we'll mark it back here.
Look at that 15-minute candle too. You notice it's been dancing around a little bit.
Right.
Or is that? Wait a minute. I'm sorry. I'm looking at the wrong chart.
Like any time frame we see a channel, mark it out, even if it is on a 1 minute chart. Sometimes on a 10-second chart, I'll mark these out. But knowing exactly where the break is and where the expected move would be after a break, like break at 404, expected move about 404.25. Okay, a 25-cent move is not going to do you much here, but on the ES it will.
Also, that level I always talk about, if you look at that 15-minute chart, again, I know I'm on a 15-minute kick right now. If you look at the green hammer 2 candles ago, and you look at the the bull bar before it,
Right.
right where they join the open and the close. That's an area where that doji dragonfly looking thing wicked right into it, and you want to see that body of this candle close above it.
Right.
You really don't want to see it close below it if it's going to continue bullish. And then this is just a bull flag if it holds for the next 9 minutes or so, 8 minutes or so.
Yeah, we've got a few 1 minute candles in this little trend here, channel here.
So let's see. Man, that petroleum status really moved the market.
Yeah.
Now, normally it would.
Right. Normally you
But
get
that's
like a
just-
big bar, but you got
Yeah,
nothing.
that's what Sig was saying with all this econ coming out this week and the FOMC, happening. A lot of those events aren't moving as much as they would normally move.
Holy crap. Cores just went parabolic. It's got a shot at breaking resistance. Let me look at that real quick. CORZ. There's another one of those really cheap penny stocks.
Man, you're going back to the day, baby.
I am. I love it. It's still fun, dude. I don't care what anybody says. Even if you've
Yeah.
been scalping, 20 lots of ES contracts, the penny stocks are still fun.
Well, yeah, they are fun, and they're also, like we say, I'm gonna go. I'm feeling bad. I'm gonna go get me a penny stock just to scalp it. So it's like, yeah, I can still do this.
Yep. It's all price
Days
action,
when
baby.
you throw an interception,
Yeah. You got to walk it
Yeah.
back through the goal. Take the power back, as some of my football friends would say.
Yeah.
Take control of the game. You got to take the power back. Where's the power? Humiliate the quarterback. I got this little crossover point. I just drew 2 lines. We know where the points of control are. Looking left in this chart. I haven't marked the pivots on this, but I know where they are. And we're coming right up to an angular resistance here at 16.5 cents. If it breaks out, we've got a shot at going up to the next control level. 19.2 cents. It's just under this consolidation here. Got shot at 21, 22 cents. If we get above 25 cents, this is a massive gap, guys. This is
Oh, look at that. Yeah.
one of those stocks that can really, really rip percentage-wise. So when it starts getting volume like this is mostly just a short squeeze, but look at what the chart's telling you. Rounding bottom. Where's the point of control that we look for the best possibility of a breakout? Right at the top of that control bar, 17 cents.
Watch your MES and SPY at this level right here. See what it's going to do.
It's creeping down this channel. It's had the third leg against resistance, but it came right to the regression.
Oh, this is what I wanted to see, what was happening here. Okay. Breaking that previous wick level.
This is why we always draw the regression line or the center line on these channels.
Gotta love it.
If it breaks that, we get a bar spinner bar controlled move right to the angular support. But if we bounce off regression, we've got a chance at building a measure move outside the channel and then a retracement. Still valid for a 404.25 price target.
That hammer that just closed, it's still interesting to me because it started red, now it's closed with a wick. It's almost as if it's a small double bottom between those 2 green hammers on the 1 minute.
Right.
That are walking that Globex high from 11.15 at 403.54.
The mini Wu
So that's an
Tang.
old.
You
Yep.
literally look at that like it's a double bottom. It's exactly the point. You got
Yep.
your L1, your H1, your L2. The objective is if it's a breakout, it'll breach H1, which I'm going to call R1 because now it was previous support at some point. Now it is resistance, so we call it R1. R1 breaks at 403.94. And then your target
Right there with you.
is just to the left. You got a control bar here. You'll see a pause at like 404.10, maybe, and you see the extension to 404.25.
Where you get 404.25, that's where I'm looking.
Right
Oh,
in
the
the middle of
extension.
this. Yeah, right.
Okay,
that's
that's
a
the
wick
extension,
extension,
yeah.
mind you.
I was looking at the pivot at the 404.40.
But this is exactly how I scalped those 3-pointers on the MES over and over and over again.
Mm-hmm.
Just watching that 1 minute.
That's how you did it.
And it never ceased to amaze me how much smoother SPY's chart is compared to the ES chart. So that's why I watch SPY and trade the ES.
Your regression line, you hammered on it, didn't you? The body of the hammer's inside it?
Right in there.
Uh-huh.
Love those.
I just tracked that with you, and I was looking at the levels. I was saying, yeah, that's double bottom, and I was looking at the R1, which was that, like you said, resistance, and Webull and I and me and TOS sometimes are just like a penny off, or it was great. I was like, yep, there's that level there. When you got to that target level, I was like, wait, where'd you get that?
Right, just a couple wicks. I'm going to get to that diamond pattern in just a minute, actually. I want to talk about that before we sign off. Be patient. We'll get there. If you look at that strategy video we posted with Victoria's amazing trade there, that's exactly the same. I mean, it's a shorter time frame here. We looked at the previous day's price action to find the trend going up. But no matter what time frame you're looking at, it's the same. You got a trend up. It came back, it tagged 50% of that trend right here. That was where this hammer right here formed, wicked right to it. And then it bounced. And this is the channel. This is the 50% retracement. The same price action on SPY that you see on every penny stock you've ever scalped. Mm-hmm. Just got to know where to find it. And it's just amazing how quickly you can identify that when you've had enough seat time. It just pops right out at you. Like, aha, I know where those levels are. I know exactly where this trade's going. And dude, it's just methodical. Boom, 404.25.
So you're go to your 15-minute again, and you see the bull flag. Yes. See how that candle was red before, and then you look at your 5-minute, and you're getting that big bull bar right now that comes right after that red hammer, and that red hammer on the 5-minute. Let me go look at my SPY. That red minute on the 5 hammer.
Red minute on the 5 hammer.
I need more coffee. Ordered my coffee machine.
There you go.
This thing was driving me nuts this morning. Part of the reason I'm late. It just takes too long. So on the 5-minute, that red hammer that we got wicked into its body is in the 8, but it wicked into the 15. And it's just showing you, look, I'm a big flag.
Yep, big flag, and it just broke its 100% retracement right here with a wick. If it's gonna pull back, this is where it will. But if it continues on, this sets us up for a measured move, just like any other time we see a consolidation, even in a channel. Yep. This is your leg. There's your consolidation, and you literally just use your mind's eye, or I just go with numbers. Like 402.50, let's round it. Where's the center of this? 404.
The high of that 1 minute wicked into that, what did I say it was earlier? I like SIG this morning. It's not cocky if you're right.
Right, yeah.
Did y'all hear that? I was like...
That's a good point. So our target, if this was a full measured move, would be 405.50. That's all the way up here. And half of that is relevant. Sometimes a measured move doesn't go a full leg, it'll go a half leg. And we had a pullback in this leg itself. There was a pullback right here. So first it was a half, then it was a whole. So where's about the half? So 404.75 is probably going to be about where your pivot is. And I think I have a pivot there anyway. It sucks that it doesn't show me the number as I run over the pivot anymore. It used to.
It sucks.
But you can see it's
makes this work
right
hard.
there, 404.75. It's there.
So it wicked into that area was what I was getting to. I wasn't trying to be cocky. That said it was going to hit like about 404.40. That was a pivot I was looking at, and it wicked into 404.45. Now it's building off of this. I have 404.17.
I'm going to break out some HA candles.
That wick, if this body on the 5-minute fills that wick up.
Here's some classic.
They might let us run up until 2 o'clock.
They might. Here's some classic price action right here. Rising channel. HA candles will destroy your rising channels. Regression line, but no, it's still there. All right, there's your descending channel. It made its 50% retracement right here at the pivot. Fast as I can draw it. If it breaks that, it'll fail and go right to the 200 and find support down there maybe. If it holds here, know where your regression line is. Just draw it in the middle somewhere. It's fine. Make it a different color if you need to. We can even go back and change it to standard candles if we want. It doesn't look right. Let's go with HA. And the idea is if this is going to make a quick retracement, it'll hold a support line somewhere and go back to like 16 cents. So we might get a half-cent move, three-quarter-cent move, whatever. And just like SPY did over here. If it fails, it fails. You stay out. If it starts to break, trade the break. That simple. All right, let's get to that diamond pattern. I'm going to show it on a 2-hour chart first. God, it's a lot of dope. It's kind of, yesterday we had the white lines here, where we've got the majority of the middle of this diamond pattern. And I started adding a few lines to accept this part of the consolidation to be over here as well. So first we have our angular resistance, angular support, and those form channels on their own. So when you see a diamond pattern, extend those lines out because it becomes angular resistance and angular support on both sets. So you have your expanding range side, there's your angular resistance, there's your angular support, and you have contracting range side, angular support and angular resistance. So what this tells you is where the focal point will be, where you can expect it to break at some point. And right here we had a breakout yesterday, and diamond patterns will often do this. They'll go for a breakout, they won't hit that angular resistance precisely. It wicked right under it. I mean, it had a few points to go. 417, I think 417.30, 417.25 was the limit there for yesterday, and it didn't hit it. Oftentimes when you get these diamonds, they'll break out one way, and then they'll about face and rip it off the other way. And it sure did. It retraced all that. So now it consolidated back at a center pivot. And if you kind of mark, there's 3 levels here. You've got your red line. If it fails here, you know it's going to be bearish. I should probably paint this one yellow. Let me mark it first. There we go. Let's see if I picked the right line. There it is. We're consolidating on that. After that fake breakout, if we can't break the resistance zone here at 404.50, we know it's very likely to run bearish. And what the diamond pattern does is it sets up your range. You have to watch the smaller time frames to trade these because you have to know exactly when it's hitting a resistance or a support or whatever. You have to see your reversals on the shorter time frames and trade them. On Jackson Hole as an example, I don't want to go and dig that out of the chart because I've erased it long since, but in Jackson Hole, just before Jay Powell picked up the mic, price ran all the way up to angular resistance precisely. And then on a 1-minute chart, it printed a clean reversal and broke over, and it went all the way down to the extreme low. That's why I marked these out in white. It went all the way down to the bottom, and it played it to the friggin' penny. I kid you not. It went right to those angular lines. And it was such a broad range, it was like, how the hell do you trade that? But if you know where the range is, that's all there is to being able to trade that. You have to know where the range is and know where the expected points of reversals will be. And when you start to see those reversals take shape on a shorter time frame, you'll know that you'll be able to trade it. And it was that simple. Knowing where the expected range was gave you a clue as to where to take the trade. Where to take it was exactly on the reversals. How long? You just keep walking through every line you saw. And we were able to line out a wolf wave and a couple other angulars and pivots and we knew exactly where to expect pause candles in that downward trend on Jackson Hole Day. And sure enough, it paused on them, consolidated a few bars, broke into a bear flag with a little pop at the end, and broke over and continued on the trend. And I was trading that with options on SPY, mostly spreads, and at the same time I was trading that on the ES. I knew exactly where to take profit on the ES, and basically compound traded that whole entire trend over and over again. I learned that technique by streaking direct options trades on SPY. I would day trade 3 to 5 days to expiration. I had a sweet spot between like 38 and 42 cents. I just looked for the premium and pick it there. If the delta was right, it was in my trade parameters, and I knew price was going to head towards there. It didn't necessarily have to expire in the money or even have a remote chance at expiring in the money. I was just trading the swing from A to B. So when I would see these trends and I'd see them streak like that, I know where all the pivot zones are, I know where all the angulars are, and I know exactly where to expect my pause candles in those trends. Like as if this was a trend here, you see break over, there's your pause, it retraced, came back up, remained bearish, pause. I would go and enter every leg of that. I'd go, puts here, take profit here, reload here, take profit here, reload here, take profit here in a trend until it ran out of pivots to trade or it ran out of angulars to trade. With the ES, I was able to go and write those short contracts, right to the pause candle, take profit, wait for the setup to come back and reject, go short again, run it down. And in some parts of that where there were major angular support levels, like when Jackson Hole hit this line here, prospectively, after having broken over at the top, it was a consolidation point where it rode a bullish trend for a little while. And I went ahead and went long in that until it hit the breakover, took my profit, flipped my order, went short, rode the rest of it down. Those diamond patterns don't give you the exact setup, with an exception. They're very unpredictable on the outcome. So like most wedge patterns, most bull flags, bear flags, whatever, you got the 60-40 rule. Diamonds are a little less. They're not 50-50. They're more like, let's say 55-45, whatever you want to call it. They don't always break, but when you see them in a position on a trend, you at least get an idea of what to expect. And here we had a big diamond top, had a high probability of breaking down, slightly higher probability breaking down. Here we had a diamond bottom, had a slightly higher probability of breaking out. And in those biases, they tend to trade pretty regularly. You can look at them as a triple top, triple bottom. You kind of get that same feel, but when you draw it as a diamond, you know where the expected range is, and that's the important part. Anybody can trade reversals on a triple top, triple bottom. They're going to be subject to that 60-40 rule as well. But when it comes to diamonds, you know where the range is. You know where the expected trades will be. So you have a much better time trading diamonds than you do trading wedges. When you get them at the top of a trend like this, it's likely to be a bearish reversal. When you get them at the bottom of a trend like this, it's likely to be a bullish reversal. And we know every time we've seen a diamond, we've not only expected to know where the range is, we've expected to know what the general trend was going to be in the long term. And 5 out of 5 events, I've been able to nail the range on those. It's pretty neat. So now we've got one. We've got an event today, and we know where the range is. We have some trade ideas, and all we got to do is wait for the reversals and trade them. Pretty simple. That is my breakdown of the diamond pattern. It's recorded right here on YouTube. And if you like it, if you like the explanation, you like what I talked about, and you get the idea of how to trade these, tell your friends. Get us some exposure. Help us out. We're only going bigger and bigger and bigger, and we want to keep our prices for membership very low. A lot of that comes from our YouTube exposure. So, all right, I'm out of breath on that one.
Excellent. Now I have questions.
Sure.
Pause bars. What do you see as pause bars? Pause candles.
So pause candles.
Because that's the key in that is knowing where the pause candles are and what they look like.
Whenever you draw a trend of any kind, and especially if you start to see it in a range channel like this. You know where your pause candles are expected to be. What recognizing them is knowing what to look for. Here we had a dragonfly right here, or tombstone, or whatever. I'm terrible with names on the candles. I just
Yeah,
know.
you had an upside down damn doji.
Yeah, there you go. I just know what they look like, but where it is more important than what it is. So you got an angular support here. We knew kind of where that would be. I drew this out later, but we knew that there was a trend line here. Heck, this is where TrendSpider really shines, actually. Let me pull that up.
I want a picture of your kids at their age now on bicycles in that same spot so we can see that again.
Oh, I will. I will definitely do that. Let me get the 1 minute chart out here. So you can see that TrendSpider drew that for you. And this line probably appeared before we knew it was there. And essentially, when you know where you're expecting a reversal, the pause candle is going to be, when it's live, it's going to show up as a little green hammer at first, and then it'll break into this big old red doji. Knowing where to expect it is more important than knowing where it is. But what told me that there was likely to be a pause candle there? It was the control bar before it. So there's a big old control bar. This closed range gave you the trend line. You know where to expect the pause candle. And you know where the range is on that previous control candle. So you want to take profit on the body and wait for another setup to tell you to go short again. And then that setup was up here when it rejected angular resistance. The entry could have been in this spinner, it could have been in this dragonfly here, whatever. There's your control bar, another control bar down, body equal to the previous control bar in that trend. Right there's where you take your profit.
Dude, that is brilliant.
And it's just, when you're day trading long enough, man, you just start to pick those up. They just click. You literally just muscle memory trade them. You've got your trade plan, you've got your pattern recognition, all in the same instance, in the same spark of neurons firing in your brain. You already know what to do and what you're looking at. And when you know where to look for them, that's the key. And when you know where to look for them, you can shut off the tendency to a lot of people look at a chart and they'll be like, I want the chart to show me this. You can't think like that. Let the chart just show you.
Right. No bias. Don't come in with a bias.
Exactly. And when you can
Be a
break
bullish
that
bear.
habit of sitting there looking at a chart for an expectation rather than let the chart tell you what to do. Once you break that habit, man, it opens up a world of price action trading to you like you wouldn't believe. And it just becomes like an instinctive muscle memory type of thing. You just let your lizard brain handle it. It knows what to do. So, another question.
Clap. That was awesome. It's like, yay!
Yes.
Yeah, that was amazing.
Because those candles, and that's what I focus on. I focus on those candle closes, where they are in relationship to a channel, what they're doing in relationship to other candles. And, I just followed this trend down that we had on these last, 10 candles or so, last 10 minutes. After Jeremy did that, I said, well, let me go just knock this down. Let me see. And I saw the control candles, and I saw it's a small channel. It would have been small scalps. But I followed it, and just as Jeremy has showed us, on the previous down channel. So
Right.
It's the same thing, bro. It's just they look a little different, but the control candles are there, and the control candle closed right before the hammer.
Just
We
flips
just
it right
crossed the 404 on SPY.
Yeah.
Sweet.
Yeah,
So
we did. It's still wicking in that 404.51 area. Excuse me.
it brings me back to, like, if you lose touch with watching a SPY chart or a large cap chart, and you start to just get a little lost in the price action on it, go scalp a penny, dude. they're legit the best way to see these things and get that pattern recognition with the lowest amount of risk possible, and then come back You know, you don't have to walk away from SPY forever. Just once in a while, if you just start to lose your way, dude, go scalp a penny. Not only will you build your confidence back up, you'll be able to build that muscle memory and just get that pattern recognition down and know exactly what levels to trade to. Let me read the next question here. So if you see a breakout of a diamond like yesterday to the upside, you wouldn't go short with confidence on that. Actually, that's where I started picking up my put debit spreads, is right in the top of that noise, and right when it broke over. Because I knew that it was not going to quite make it to that extension on the angular resistance up here at that time. And then to boot, there's another trend line. I didn't have this trend line drawn yesterday, but I knew kind of where to look for it just by looking back a little further. Just a basic trend line. And
How bullish that is. Sorry.
it came across 3 wicks. Yeah, we're bullish for the moment. We're right in another rising channel too,
yeah.
so
Couple.
expect a third leg somewhere in this mess. It'll consolidate one more time before it picks a direction. During yesterday's price action, where did I recognize the reversal? Right there. As we broke back through, we rejected another trend line that was in there.
40-80-50 is a volume ledge from a while back. I still have it on my chart. They still hold.
Just like what I look for on a breakover on a 10-second chart, that 8 period was the clue right there. We broke the 8 period, stayed under it, attempted it again, kept under it. That was bear, bear, bear. And just
Yesterday, right?
Yeah, and just like anytime you see a pause candle, it's the same damn thing, just a little bit bigger time frame. It's a 5-minute chart. One there. Knowing where that angular support was, it's pretty simple. As soon as you see the breakover and you know there's this range here, that's when you draw that line, and then it was a matter of, okay, well, where's it going to reject? We know where the 8 period is, and at that time we could have draw it like this. We just extend it out, adjust it as we go, and it showed up. Breakover, rejection, run it down. Knowing where the control zones are, you can also see pivots where you can find a place to expect, you know, a pause candle. This pivot here at that 407.90, that's an old pivot. We've had that up for a while. Clean little hammer here, pulled back up, attempted the 8 period, rejected, came back through. Ride the trend short. Where's our next pivot? Oh, about 405.50.
That is great. That's one of the things I focus on. I've been looking at is that when you have those channels like that, but you know where the pause candles, I see them a lot. Like you know the big candles when they pull back and you get those pivot spots where you get a green candle with a wick, and then you get a red candle that closes or opens right about that close of that green candle, or slightly above or slightly below, regardless. But it won't be a doji. It'll be a longer candle, and usually that's a pivot spot.
Right.
And so I'm always looking at, you know, when you're looking at those channels, I pay attention to the wicks, right? Where are the wicks? And you just showed us on that descending channel, you could see where the wicks were. Those were spots where you were getting in and out.
Right.
When those wicks came about, be it inverted hammers on the top, or large wicks on the top, or you know hammers on the bottom, like you said.
Exactly. Whenever you see a candle like that, it is typically perceived as a reversal candle. You know, a hammer. It's just when one trend. This is a trend. You know, even though it's two or three 1-minute candles long, that is a trend. That's a reversal. That simple. Here we got wick right into our angular. We knew where the angular was, but drew it out before this hit. There's your third leg on the top of the channel. Here's your regression line. Came off the bottom here. We knew where that line was by this move. This move was easy to predict. So yeah, back on actually 11:13 is when this pattern started to form, and we recognized that this was an M-top as well. This is a little M-top here, and it broke down. It retraced to a control zone. It didn't get the whole range of an M-top like we would expect, but we were able to trade it from critical support to wherever the hell it stopped moving, right down here, 390.45, 390.50. Pretty easy move. So knowing where you're expecting a pattern is one thing, but knowing where you're expecting that pattern to break is where you find the trades. And we always say, don't trade the setup, trade the break. That was the break. Boom. So working into this range expansion here, it's a little challenging to trade these trend days, but we knew we could go into a shorter time frame and scalp them. Not a problem. Using this expansion, it's kind of out of touch here. We don't have an actual lower trend line here. And realistically, we should be moving this one, over to here. But it's going to come to the same place. And, the whole diamond, if you want to go that far out, whoops, end up dragging the wrong line. I'll drag. Why does it keep doing that? It's disappointing. Highlight. There we go.
There it goes.
Yep, right through the regression line.
Yep.
Target right in the bottom of the channel. That's the third attempt on support. That'll probably consolidate one bar and maybe break over there.
Watch this. See if this 5-minute candle closes a bearish engulfing.
Wherever you draw the start of a diamond pattern, yeah, it is relevant for your quicker trades, but you want to know where the range is. The slope is going to adjust with it. You can see you got this slope here, this slope here, this slope here, this slope here. It's all going to point to about the same radius as far as where the range is expected. So it doesn't really matter where you go on the beginning side as long as you know where that angle is going. It'll give you that range still. The other side of it, this resistance here is actually a little more important. That's why I added this line here. In fact, I'm going to make that one green just so it stands out. Doesn't mean it's good or bad, it's just green. So
Not easy being green.
We have this slope here. That's going to be relevant later. We'll leave it there. But this is our extension of angular resistance here. Knowing where that is going to give us probably an expected pause when we break into that 2 o'clock FOMC meeting. That'll be relevant later on, so mark it out anyway. It's going to completely confound your chart. You're going to be all over the damn place with lines, but just know that they're important for now. That's all you really need to care about. Draw a line anyway. And if you look at TrendSpider, it's got them there. I mean, they're all over the place. Hell, you can go up here and you can go into the trends and go with all lines. Watch this. You think my chart's bad? Oh, not to mention, I got an email from TrendSpider yesterday. Chart patterns they've added. Double bottoms and double tops to the mix, so you can start scanning for those.
Because we're all looking for them. That's why.
Yep.
Because they know that's a price action thing.
Yes, and you can go and scan them too. Where's the scanner? Okay. I'm still getting used to this platform, so bear with me. But there is a scanner somewhere here where you can scan for those patterns.
Candle closed. Look at that.
Ooh, ABCDs. I haven't looked at those in a long time.
Yeah, we hadn't said anything about those. I hadn't heard any of those that saying in a while. But they're all over the place. They're everywhere.
Drawing tool.
Chart
anyway.
nasty that one.
Isn't that nasty?
Wow.
But you can go through with TrendSpider. You can go through and click on any one of these lines. You double click it, and it'll highlight it for you and keep it.
How do you even read all that?
I'm just kind of scanning where the price action meets them. So I can go and double click on it, and then I can go turn those off. Go back to the the more lines. And just keep those as relevant lines. Take away a lot of the nasty. And you can start seeing some stuff. But it's like if you find yourself having a hard time finding a time to draw patterns or draw lines or draw angulars, whatever you're looking to draw, with an exception of pivots. It gives you a point of control, and you can add pivots here too, but I just don't because it's messy enough with the way it is. But long story short, you can go in and pick off those lines real quick. It draws them for you. Then you just go to less lines, and you can see where the important ones are. You can even manipulate them too. You can go in. Let's see. There's supposed to be a way you can draw more, but I'll have to go to the drawing tool for that. But you can extend them back if you need to see where they came from. That's fine too. But compare this to my chart, and my charts are always nasty. But we still see the same lines are there. All right, so our 5-minute chart tells us that there's a rejection off this pivot here, but we're still consolidating, and we've got a slight range expansion channel here.
So you have a pivot right there at where the rejection is, right?
Right.
Yeah, that's what I'm talking about. That look on that 5-minute candle with the wick on the green candle, and then the long red body next to it, that bearish engulfing. That is where I would set a line and say this is a pivot, and you already had a pivot there.
Yep.
That's if you go look at that, you'll see that on a 2-hour and a 1-hour and a daily a lot. You'll see that 2-candle pattern, and you'll see price a lot of times pulls back down from it there, and those are pivots that you can find on daily chart looking at that 2-candlestick pattern.
Exactly.
Now you want it to be above everything else. You don't want it to be in the middle of something. But when you see that above, that's when you say, "Oh, that's a pivot."
And then you can do quick pivots too. You can go and look at range where price has been rejected a couple times. You got 1, 2. This is where you decide, okay, is this going to run to the regression line, or is it going to stop here?
Right.
Hey, Jeremy.
Yeah.
Have you started scalping on the trade station yet?
I'm still studying that platform. I've scalped penny stocks on it. I've scalped a few large caps moves with options on it, but I haven't messed with the futures yet. I've got to get into the futures. I just haven't had time to look at it. I've been busy with a bunch of stuff.
Yeah, learning a new broker is really a challenge sometimes.
Especially stuff like that. Like I never got into TOS, and I think
Right.
TradeStation is just about as complicated as TOS. There's a lot of moving parts, so it's going to take me some time. It's not like TradeStation or Tradeovate where it was just simple. TradeStation is like bare bones. Still a great platform. It's just I'm moving to the next level with TradeStation. But essentially, you can kind of get a little bit overwhelmed when you go from a simple platform to a much more complex platform. So I'm going to take my time with it, learn it really well, and then I'll go and scalp with it. But for now, I'm just learning it.
Gotcha.
Yeah, I think Sig said he spent the whole year working on learning TOS.
Yeah.
And you go look at his videos, and he does things I still need to do. You know, I mean, it's like he's got his styles and his line. Like there's a little thing that drops down. You can have all your candlestick styles and everything. And he's got it lined out where he just has to click on those, and he gets exactly what he wants on his chart.
Yeah.
Yeah, it's been close to a year now, and I've been just learning every day something new about my trading views.
Oh, good, yeah.
There's a lot.
Yeah.
Yeah, well, who was it? James used to use TradingView
Here we go.
a lot.
There's your push. Hammer. This has to close a body above this hammer, otherwise this fails. But yeah, there's a lot to learn with those bigger platforms like that, and they're also a bit data hungry.
Yes, yeah, TOS. That's why on my laptop I can only run one pop-out window, because when I was running it before, and I would try to, especially before I was moderating, I'd have a couple of those windows open.
Right.
And it just drug it down my computer, and then the Bookmap on it, which after using Bookmap, and I paid for the subscription, I was like, it's not for me. Some people like it. I know Sig likes it a lot. I just.
Well, I gotta get going, guys. Thank you for everything, and good luck today in the market.
You too, man.
Thank you. Have a great day.
Great. And
So,
it's great having you. Always great having you with us. You ask some really good questions, and I love a
thank you.
challenge.
Thank you. Take care.
You too, man. So Eric here on our YouTube channel was talking about this line right here, and we got price butted right up against it and backed off. Why am I not seeing it on my other charts? What's going on here? I got to refresh them.
Excellent stuff, Jeremy. I like it when we get crazy sideways market, even though it's looking quite bullish right now.
Right.
Although it's looking like we're going to go sideways for a while.
I think we're going to grind to a sideways range until we get to the event. But yeah, it's been great to be able to take our time explaining stuff in this price action because it's not so volatile that it just like becomes the focus. It's
right.
just slow enough to where you can scalp little stuff, and the ES this makes it easy to scalp the ES guys right here. All this dope, and if your chart looks like an absolute mess by the end of the day, you've probably done something right.
Well, if you're gonna chop wood, you're gonna make wood chips.
That's right. And knowing where this line was pretty cool. Even though we have a rising channel here, this resistance point was very important. And look, dude, had a hammer, looked like it was going to be bullish, and hell no, bears sold into strength. Pew, took a bar right to the angular. Love that. All right, I got another question on our Discord chat, and oh my gosh, that's a paragraph. Question on an iron condor setup. I've started to use 0DTE, that's 0 day to expiration, SPX weeklies. That's saying that it's a weekly expiration, which is probably a Friday. Actually, that can be a Monday, Wednesday, or Friday. SPX. I don't trade SPX that much. I did for a while, and I made some great trades on it, but I went back to SPY. I don't know why. Long story short, now I'm selling the $1 call and $1 put at the opening, which gives me a certain range around the opening price depending on volatility. Then I'm buying a 5 or 10 cent put and spread to complete the iron condor. So essentially you're selling to open a call and a put right at the open. You're letting it fade a bit, and then you're locking it in with turning it into a can't lose iron condor by selling a couple strikes above and below the call and put there. That's brilliant. The latter I'm actually doing mainly to keep my margin requirements lower, because it does require some margin, in comparison to using a short strangle. However, the profit-risk ratio in such a setup is pretty terrible. Yeah, it's a little bit. It's going to take some margin and some risk, meaning that I've got to add stop losses to both the sold call and put options. That way, if it's a success, I gain slightly less than $2. If I get stopped out, I lose somewhat over $2. I get stopped out in about 30% of trades, so it's profitable in the long run, but you've got to sit through some losers first. And there's a conundrum there, and I'll get to that in a second. My question is, this way of using both an iron condor setup and adding stop losses a good way to go, or is there a smarter way that adds to the profitability on average? I realize a stop loss is not going to protect me when the price shoots up or tanks, but so far it seems to work just fine. And there's nothing wrong with that being lengthy. There's a lot there, and there's a simple answer and a long answer.
That was a good question.
So I don't like opening a naked position. I like to essentially have some sort of way to control maximum loss, and I never will open a naked call, even though you are at zero risk of assignment on SPX because there's nothing to be assigned. That's fine, but I would rather open it as a long position the previous day and then sell the short legs on it the next day. But then again, the amount of time decay on that is going to eat into that to where you're not going to be able to have a high success rate with that. So you can do it as a wheel trade instead. Now you've got a way to back it, but you can't do that with an SPX 0 day. So if you look at what SIG tends to do instead of selling naked to open the short side of the 0 day at the opening range, he'll do it with spreads instead. So he'll sell a credit spread, and that way your loss is hedged. So he'll sell, if it's coming out of the bottom, he'll sell a put credit spread at the bottom, and then if it's ranging upward at the open, he'll wait till it runs out of gas or gets a little low on fuel, and then sell the call credit spread on top of that. And then you can leg out of that, or you can just close it as a whole towards the middle of the day when the implied volatility falls off, the time decay is eating it, and then just buy it back cheaper than it was when you sold it, and have a much higher probability of profit to begin with, because you're not having to have a stop loss on them. You know that at worst case scenario, your loss is capped in the width of the spread rather than selling naked. I can kind of go both sides of this, because with equities and ETFs, it's going to be different than the SPX. So if I'm going to use that strategy on 0 days for credit, I would rather do it with a spread, just because it hedges that loss. Plus your probability is a little higher on success of it. Even if your profit margins are lower, your probability is higher, and that's where the difference is going to be, is that I would rather have a higher probability than a higher margin anyway. So for the SPX, that's a valid way to do it. I mean, you can certainly keep doing it your way if it's working for you and it's better than a 30%, where you're getting profits on it. You can keep doing that, but there's ways to hedge your loss ratio a little bit better and have a higher rate of success. One analogy I take to heart, and this is kind of how I started and how I am now. It's the old trade small and trade often. If you aim small, you miss small. There's many ways to skin that cat, but what it comes down to is I would rather take a bunch of small risks and make a bunch of small returns than take a big risk and occasionally take a big loss. I would rather not have a big loss. So just I like to keep my marbles so I can play with them later. Compare that to running a similar strategy on an equity or an ETF. Then you have assignment risk. That's a different ballgame. And I've gone and sold 0 day spreads. I've done it on Robinhood somewhat successfully, but they do not give you the option to remain in control of that. They'll auto liquidate it if there's an assignment risk. It's silly. So like I've gone and sold what I knew was going to be a killer 0 day credit spread on SPY, for instance, and had it closed early because of assignment risk. Although it does tend to close them with profit, or at least a break even. It kind of sucks to trade them on that broker. But if I was to do the same thing on Webull, I'd have to have a bunch of margin to handle it, which I can. I can set up a margin account, but I'd rather not. I like having my cash account. So you can sell 0 days on Webull much more successfully, I think, if you have a margin account on equities and ETFs than you would on a brokerage like Robinhood. But there's one other thing. You can actually you can sell 0 days on SPX on Webull if you have a margin account. You just have to have the margin to cover it. So if you're opening them up as a short strangle at first, and then legging the long legs in on top of them, you'd have to have every bit of the margin necessary to cover that on a Webull account. You'd have to be upwards of $100,000 in some cases to handle that with Webull. But commission free is awesome, because then you go to close it, you don't have to worry about commissions. You can take advantage of much smaller profit margins when you don't have commissions. So if you wanted to do that with doing spreads on Webull, that'd probably be ideal. In fact, I'm considering it. So like I said, there's many ways to address that long question, but the generalization that I have towards it is I would rather have a much smaller risk on that position and not have to deal with stop loss. That's just my trading style. So when it comes down to it, I'm eventually going to kind of walk people through taking a long condor or long strangle position and turn it into a synthetic for selling short legs. So you can convert them into that same strategy, but in reverse. It's long instead of short. With the wheel trade strategy, now you can hold equity. You can go and use exactly that. You can sell to open a short strangle, and that's exactly what I do. Is I'll sell those on the opening range of an individual equity. I'll have 100 shares per contract long in position in the stock, and I'll sell a covered call and a cash covered put. That way my risk is secured. You can do that with equities where you can't do that with the SPX because you can't buy the SPX. So if you wanted to do that strategy with a lot more success, the wheel trade strategy is going to be awesome for you. And if you want to start with stuff that's slightly lower risk as far as amount of outlay you have to put into it, one that I've found with really high yield is X. And I started doing my strategy video on this one actually, and I've got half that series done already. I just got to finish the other half of it. But let me see if I can pull the options chain up. Oh, I gotta remember how to get that. Give me a second here, I'll find it. Strange.
Going to say looking for a push on that 5-minute candle, looking for a push on the MES and SPY. Watch out for a possible double top.
Very cool. See if I can get this rolling here. Yeah, it's looking a lot like a double top, isn't it? Right into that pivot.
Yeah, right in that. Exactly. I love doing this as a team.
Man, it makes a difference.
Come on, y'all. Y'all gonna get this stuff. Look.
All right, so
I did this before I was a moderator with Jeremy. We can do this.
We can do this. We got this. All right, so here's two data expiration. So December 16th options on X. Let's see, this is both calls and puts. Let me go one side and then the other. So on the call side, you got covered calls. You know, you could have sold those yesterday. This $25 call. Right now, you would have been able to capture a 56% move. This is, let me see, these are not, I haven't subscribed to data on this particular account, but these are like 15 minutes delay, but they're pretty close. So you could have scalped overnight selling to open the $25 call, 56% of the risk, and that would have probably been going for about $1 yesterday. Pretty nice. And then look at the put side. You can go and sell a 24.50 put. Well, that's gone up quite a bit, so you'd be kind of at an assignment risk on this at the moment. Not necessarily, but the yield is what's important. So if I'm looking at how much I can yield off of my cost basis selling options on this particular equity, if I had 100 shares long and I was okay to take assignment on another 100 shares, I could go and either go a whole dollar out of the money or, you know, right at the money, whatever. Significant amount of income to dollars of outlay ratio. So if this was, let's just assume $25 a share, to take 100 shares of that, you need $2,500, and to be able to double that, you would need $5,000. So if you have at least $5,000 of risk capital, meaning your account size will probably be much bigger than $5,000, but depending on your percentage of risk capital, You could have $2,500 long in the position, have $2,500 earmarked to take assignment on a cash covered put if you need to, and run that strategy. You would sell a short strangle on this every single day on the opening range, and then swing trade those back in by buying them back later in the day. So if price stayed flat, you could do that. And looking at yesterday's price action, well, selling that 25.50 would have been your bag. You probably would get assigned on that put probably pretty early. So you got to be able to look back a little bit and know enough about where the range is to know about where to sell those. But the idea is you're looking for yield. So how much can I make on this thing on an average day swinging in and out of a short strangle? And that's where the wheel trade strategy really shines, because you can go and pull that up just simply looking at the options chain. You can move it out another week if you want. My mouse disappeared. You can start looking at pretty significant amounts. That's $50 for a $24 put that you can sell right now into the next week expiration. That's pretty reasonable. It's in that range. It's at the bottom of it. And then the call side, we would look at selling probably a 25.50 call, same. So we can average in a week span roughly about $50 on each side. That's $100 off that share price every time you're successful at this, even if you just trade it the traditional way where you're selling and letting time decay eat it up and then buying it back for like a nickel or a penny or whatever you do at or around 0 day. Repeat that process over and over and over again. But the the key factor is time is going to pay you, and yield is going to give you a clue of what you can make in that time. And yield is going to tell me even one strike out of the money, either way, I can make pretty decent returns on this over and over and over again. And I have a hedged position. The risk doesn't need a stop loss, because if I have to take assignment on a covered call, I've still got my cost basis versus share appreciation on assignment plus premium. So that break even for whoever takes that contract is going to be paying me a handsome fee for that opportunity. Fine. If I get called out on the long position, I can always sell another put and let it get assigned and take a position with a lower cost basis, whatever. So it's not the end of the world getting assigned when you have a wheel trade on. The same goes for the put side. If you end up taking 100 shares on an early assignment or even on 0 day assignment, you can oftentimes profit those shares the very next day, or even the moment you have them assigned. If it's in the after hours, typically when they get assigned up to 8 p.m., you can go and profit those shares right in the market. So if your cost basis is below the assignment strike, you don't have to care. You can still take that profit. You're still going to take it. So the risk is like profoundly lower compared to opening 0 day nakeds. It's just a night and day type of thing. And then you go in either front week or back week, or you can even go 2 or 3 weeks out on these and just roll them in and out. Finding the sweet spot in the yield is going to depend on how much time you want to hold this position and how much time you're going to have until you're in the last week where you can swing these short legs in and out. So if you see price action, you can take advantage of it, like that opening range. You can go and leg each of these open on the extremes of that range. Wait till they come down into a consolidation in the middle of the day, buy them back. It's like taking your SPX strategy into something that is like profoundly higher profit ratio as far as risk goes. And you don't have to be, you don't have to take your heart medication before you jump in with that kind of risk. You don't have to have, you don't have to be anxious about it. You don't have to be worried about it. It's just, there's so much less risk in there that it's almost relaxing. In fact, I'll hold these for weeks on end, overnight, and just sleep like a baby. I don't have to really sweat it. Even when I was doing that demonstration video and I did it with CEI, within 6 weeks I had a 0 cost basis, and I never lost a minute of sleep. And I was even distracted with running errands and working a job at that time to where it was hard to manage that trade. And quite frankly, I managed it very poorly and still made really good returns on that. I mean, if I would have been able to be here all day during those, I would have been able to scalp the extremes on that every day, and my zero cost line, when I went to a zero cost basis, would have probably been more like 2 or 3 weeks if I would have been able to trade that methodically and be here for every minute of it. So that's the difference. You can go and take the wheel trade strategy versus the 0-day strategy and be like, dude, it's a no-brainer. And I'm building the strategy videos on that. I've got half of them done, and I'm going to build the rest of them. I'm going to probably put another one together this week if I can. And then once you get it, man, it opens up a whole world of opportunity to you, and it just takes so much more risk off the table. So all the option stuff, I mean, it can be overwhelming. It can be very complicated for a lot of different people, whether you're a beginner or you're a seasoned trader. Doesn't matter. Options are going to be tricky to learn, but once you get them down, they're relaxing. It's just so much easier to be able to have that fluidity in your trade, to be able to adjust it any way it needs to be adjusted at any time it needs to be adjusted. So all right, well, I'm going to sign off the YouTube channel now. Looks like Eric had one more question. Oh no, it's already been answered. Yep, that one's been answered. All right, guys, I'll see you tomorrow on YouTube. We'll do this again. And for now, I'm going to hang out in our Discord channel and continue